For those of you on the West Coast, good morning. For those of you in the rest of the country, good afternoon. Mark Schumacher, Executive Vice President of the Home Furnishings Association, and I want to welcome you to our webinar today, which is one that has been driven by an absolute flood of questions that have come from retailers around the country about one of the new additions to our vocabulary since this crisis started. We didn't have something called PPP prior to this, but now we do. Paycheck Protection Program, which we're going to be talking about today and really trying to answer as many questions as we can for all of you. And boy, we have a great panel to help us along the way. Joining us from Washington, D.C. is Michael Borden. Michael is the government strategies lead for Sidley, one of the largest law firms in the country. He has a ton of experience on Capitol Hill, and we're pleased to have Michael joining us. Also, a couple of familiar faces to most of you. We have Chris Andresen. He is the HFA lobbyist in DC, who has been not following this. He's been leading the way with so much great information for everybody. And then we have Doug Clark. He is our lead on our government relations action team. A couple things to mention to everybody. This is being recorded, which means if you want to refer to it later or invite others to listen to this webinar, it will be available on myhfa.org/COVID-19. That's our resource page that has absolutely tons of valuable information for you that's updated multiple times a day. That's where you'll also find an answer to a lot of the questions that you might have. You can also pose questions during this webinar. You'll see that on your screen that you have the ability to send questions in. We encourage you to do that. So I'm just going to get us right in here, and I'm going to toss it around a little bit here and start with Michael. First of all, we thank you so much for joining us. And when you and I had a chance to talk about this, you said very plainly that everything surrounding PPP is a moving target. The law was passed, and then once we started seeing what the regulations were going to be, the rules, et cetera, it just was changing on a daily basis. Can you give us just a brief kind of a sense of that and what you have seen and followed? I know you represent tons of retailers, and so this is right in your wheelhouse.
Sure. Hi, everyone. Thanks for having me. It's nice to meet you, and I'm sorry that I'm not on video. My computer's firewalls we're not gonna allow it, so here I am, audio. The PPP program was conceived of, executed, and implemented in 5 days. And the idea was to get $349 billion out the door as quickly as possible to try to mitigate what people imagined was going to be a significant crisis, but were hoping wasn't going to be a particularly long one. And the program, in its basic terms, was providing free money. It was the SBA was going to guarantee loans to any business concern that employed no more than essentially 500 employees at a capped low interest rate in an amount equal to the average payroll cost times 2.5. And at the end of a 2-month period, all of that would be forgiven if you maintained payroll and headcount at your companies. And so it seemed pretty easy. And it also seems sort of surprising that the government didn't imagine that free money was going to be really popular. And so within less than a week, $349 billion was exhausted, including by a number of public companies that applied, from the first that we heard that caused controversy, Ruth's Chris Steakhouse, and then Shake Shack. Then this morning we learned that the LA Lakers had applied for and received PPP funds. And what it's led to is not only a backlash from the public, but a backlash from policymakers. And so as Treasury and the SBA have been implementing this law, they've, unlike other elements of stimulus, PPP is becoming, instead of being more generous and bigger, it's becoming more restrictive, and the rules are getting tighter. In just the last week, there have been 3 significant developments that I think everyone needs to consider. The first was last Thursday. The Treasury and the SBA issued a frequently asked question where they asked, do businesses owned by large companies with adequate sources of liquidity to support the business's ongoing operations qualify for a PPP loan? And the answer, if you looked at just the law, you would say, well, yes. Anyone who meets the the maximum employee requirement, and can certify that thanks to the economic uncertainty, they needed the money, they could qualify for the loan. But now, under the FAQ, which has the effect essentially of law, now they're saying that even though the CARES Act suspended the ordinary requirement that borrowers must be unable to obtain credit elsewhere, borrowers still have to certify in good faith that their loan request was necessary. And so now borrowers have to carefully review the certification. The current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicants. And they've added that the borrowers have to make this certification in good faith, taking into account, one, their current business activity, and two, their ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that is not significantly detrimental to the business. Publicly traded companies are now presumed to be ineligible, even if they have fewer than 500 employees. The next day, there was additional guidance. There was an interim final rule that was issued asking about first whether hedge funds or private equity funds could be eligible for PPP, and the answer was no. But then there was a second question about whether portfolio companies of private equity funds could be eligible. And this is relevant because even though the answers were specific to portcos of private equity, the answers applied to all businesses. And again, after saying, yes, a portco could be eligible if it satisfies the maximum employee threshold, it then said, however, you have to, and it then used the same type of language requiring the certification was necessary to support the ongoing operations. And then finally, there was an announcement this morning, and there's going to be more news coming later today. The Treasury Secretary, Steven Mnuchin, told CNBC that the government will audit any company taking out more than $2 million from the PPP program. And so before there will be loan forgiveness, and we still haven't seen the regulations for the loan forgiveness section of the PPP, but before there's going to be loan forgiveness for any loan over $2 million, Secretary Mnuchin said the Small Business Administration will be doing a full review of that loan before there is loan forgiveness. All because he said the program was designed for small businesses and not intended to be for public companies that have liquidity. So that is where, wow, this is significant because obviously they've also, as you've probably seen and noticed, as the application was first set and the rules were first set, they've changed the terms of under the law as well. 75% of the money needs to be used for payroll, where under the law, it just said that you had to maintain payroll, and they gave you 2.5 times your average monthly payroll so you could make payments for rent, mortgages, utilities, payment on previously incurred debt, interest on previously incurred debt. Now it's been very focused, the program's narrowing, and there's a lot of uncertainty. And if you're taking out a bigger loan or if you're a higher profile company, the risks are very significant.
Wow. Well, that's a superb starting point, especially with the news from this morning. Chris, do you want to jump in on this as well, just to kind of get us rolling here on what Michael said, and any other seasoning you can give this?
Absolutely. So beginning yesterday morning, this next round, the second round of the Paycheck Protection Program loan applications began again with an additional $250 billion from Congress, plus a $60 billion set aside for smaller credit unions and community banks. And per some of the points that Michael was making, we discovered that about $2 billion from the initial round of PPP was either declined or paid back to the government from those companies that were exposed or impacted by those regulations. And that additional $2 billion is going to be added to this pot. And as Michael said, the SBA essentially in the span of 2 weeks processed 10 years worth of loans. And so under the first round, they dispersed about 1.6 million loans. Yesterday was, as I said, the first day of round two. The SBA reported that they processed 100,000 loans from over 4,000 lenders. So certainly, as Michael's outlining, some of the changes and restrictions and scrutiny that have been added here, the allure of free money persists, especially in the face of some of the questions that are still yet to be answered. But understanding where the congressional intent was taking this in terms of the loan forgiveness aspects, and a lot of the interest that's been continued to be shown by Congress and the administration to figure this program out. The next round, this current round that we're in right now, promises to be as subscribed as the initial round as we go through. Certainly, I mentioned the system in place in terms of where the SBA has been. There was obviously a backlog of applicants that didn't get in the first round, plus you had a little bit more publicity around the program this time around. And so we're expecting, those numbers in this next round of funding to also hit its limit at some point. It could be this week, next week, and Congress will be left with another question to solve in terms of what's next.
Just those numbers blow my mind. You're saying, yeah, maybe in another week, and we're talking about, blasting through another 300, billion plus. Incredible. The interesting thing is, for those who have tuned into this webinar and who will watch it, we've got two types of people. We've got those that have the PPP that are sitting there. When do I spend it and how? And we got those that are now going to be on the front of this thing again. Now, Doug, you have been sort of pushing back a tsunami of questions. Can you kind of start us out here with a few that you've heard so often, and that we can get these two brilliant minds to get them cranking on it?
Yeah, absolutely, Mark. And we've got about 300 people on this webinar now, and I think each one of them must have submitted a couple of questions beforehand, and pretty much everybody is asking, just the basics. What do I need to do with this money to have my loan forgiven? So let's just go back to the basics.
So what do we need to do to get my loan forgiven? Michael, you want to take that?
So, sure. I'll start with that, with the caveat that we haven't seen the rules yet. I can only tell you on loan forgiveness what the statute requires, and then that in general, the requirement, I'm sorry, I have a gardener apparently just walked by my house. Let me switch rooms. Gardener, but to get loan forgiveness, if you have to now use 75% of the money you've received for PPP, you have to use 75% of that on payroll costs. So that's the first new threshold. But under the law, loan forgiveness is provided for payroll costs, mortgage interest, rent payments, and utility payments in an amount not to exceed the principal amount of the loan. The amount of loan forgiveness is reduced if an employer has either decreased the number of its employees or the salary of its employees. So the amount of loan is important to say that it's reduced, it's not eliminated. The amount of forgiveness is reduced proportionally if the average number of full-time employees during the covered period, which is the 8-week period beginning on the origination date of the loan, is less than either of the following, and the borrower gets to elect which option to apply. The first is the average number of full-time employees employed between February 15th, 2019 and June 30th, 2019, or the average number of full-time employees employed between January 1st, 2020 and February 29th, 2020. The amount of forgiveness is also reduced for any amount over 25% that an employer has lowered its employees' salaries when compared against the most recent full quarter. But there's a snapback. If an employer has reduced headcount or salaries between February 15th and April 26th of 2020, the amount of forgiveness will not be effective if the employer restores the headcount and salaries to pre-existing levels before June 30th of 2020. And then ultimately, again, under the law, and this will be fleshed out by the rules that we're expecting at any time, to be eligible for loan forgiveness, an employer must submit an application with adequate supporting documentation that includes, among other things, payroll tax filings, and a certification that the amounts were used to retain employees or to make necessary payments like mortgage or rent. Again, that's what the law says. The question will be, how is this implemented? And as we've seen on the front end, they're going to be tighter on loan forgiveness. This is going to be, they're going to be stricter because the program, I mean, what a surprise, free money was really popular, was oversubscribed and, and more popular than they imagined.
And I would also say, Doug, to build on that too, in terms of basics, you have to spend the money in that 8-week period, right? And one of the things to understand that Mike, as Michael was talking about this forthcoming guidance, what we're hoping, what we needed to do is reconcile all of these timelines, right? You have the different timelines that Michael outlined there. You've got the February 15th to April 26th rehire if you have any employee or salary reductions, reconciling that by June 30th. What does that look like practically? But certainly you as the borrower, you made your application, you didn't have any say over when you got that money. So when that 8-week period starts, over those next 8 weeks, you need to spend the money on those eligible costs that Michael outlined so that then you can apply that for forgiveness. I think it mentioned in one of the HFA FAQs about 8 weeks, 56 days. You can't have payroll go on the 57th day and then try and apply it for forgiveness. It needs to go on the 56th day. So I think as borrowers, as employers, you need to be flexible on your payroll under this program so that you can make sure that you're eligible for the maximum amount of forgiveness during this 8-week time frame.
Can we make one important quick clarification? Because this has come up so many times. So the 8 weeks starts when the check comes, when is that? Because I actually had one retailer that said, oh, well, it only starts when I put the money in the bank. Can we clarify that? Because we need to be able to tell everybody listening, when does the clock start?
Under the law, the covered period is the 8-week period beginning on the origination date of the loan.
Okay.
So that raises countless questions that we've gotten, and a variation of which is, I've received my funds from my PPP loan. Hey, that's the good news. But I can't open my store in Michigan or name your state. So and Chris is alluding to this, if you can't open your store, why do you need to bring your employees back on your payroll? And yet the clock is ticking on your loan, 3/4 of which you have to apply to payroll. Is there any relief for this conundrum?
Unfortunately, no. So this law changed from its final draft to what became the law. When the PPP program was originally proposed and through multiple drafts that were publicly shared, PPP loan amount was determined in a different way. It ultimately, as you know, became the average monthly payroll cost times 2.5. Initially, though, it was average monthly payroll cost plus mortgage, plus rent, plus utilities, plus interest on previously incurred debt times 4. And so it was a bigger loan for a longer amount of time that maybe more accurately reflects what the actual circumstances are now related to what the needs are under COVID-19. But the law is average monthly payroll times 2.5. And the regulation says 75% needs to be used on payroll. So if your large expense is, or facilities, this isn't going to be that helpful for you, because what it's doing is it's forcing you to pay people to not do anything. Of course, that's partially what the government's saying is sort of their intent, is they have the analogy I've used over the last month with countless clients is this is like a bad dream. When the policymakers were putting this together, the idea was, COVID-19 was a nightmare. They were going to give us something to make it through the night. And so we all went to sleep on March 13th. And whatever this PPP assistance was just designed to be something to get you through the night. Well, so they hoped when we woke up, and at the time they were thinking it would be May 1st, So, hoping that when we woke up on May 1st, thanks to this bridge money, everything would be fine. You would have had, the waiters and the waitresses, the hostess at the front of the restaurant, they'd all be back in their jobs. You would snap back to normal. You'd be able to go back to the hair salon and get a haircut, and everyone would be there. The nail salon, whatever. And it's proving that, this is going on longer. The effects are going to be more significant, and it's not going to be as easy to just reopen, and you're not going to be able to snap back. But the administration has made a judgment. They're trying to keep people employed. The view is that to keep somehow the wheels on the bus, it won't be for providing businesses with enough to cover their expenses. They really just want this to be able to cover payroll to the maximum extent possible. So you keep as many people employed as you can. So they're still getting checks. So eventually, when they can reopen, they get more of the what is the analogy they've used, the hockey stick recovery versus something that's slower and more gradual. Unfortunately, just the way that they've written the rules is it's very clear that it's not about making sure that the expenses are actually related to, or that the relief is related to your actual expenses. They've very closely tied relief exclusively to employment.
So, but Michael, a business says, I just have to have the money or I'm going to go on. So I'm going to spend it for what I really need it on, and then I'll worry about repaying it later. Or I'm going to gamble that the rules will change in a more favorable way down the road. How would you answer that, client?
Well, that the way that loan forgiveness works, the loan amount is determined by, the loan amount is 2.5 times average monthly payroll. And so you've got that, you know what the loan is. And we're only talking about on the forgiveness side, what the loan can be used for in terms to get forgiveness. And so if you're to use it on things other than 75% payroll, but use it for other eligible expenses like rent, utilities, things like that, then you're not going to get the forgiveness, but you'd be getting from the government as a low interest loan, presumably.
Can we do a great clarification here, because this has also been in many of the questions we've had. And Chris, why don't you start on this one, and Michael, you can jump in. Can we just define for people what payroll means? I know that sounds like a silly question, but the point of the matter is, what are the things that you can put into that bucket? I'm thinking about things about, bonuses or incentives or anything else like this. Is there a definition for what payroll is? Because a lot of our retailers are saying, what can I throw in the bucket?
Absolutely. And you can throw in all in terms of determining what your loan amount is and those payroll costs for that equation that Mike's talked about in terms of 2.5 times that amount. You're looking at cash compensation, so salary, wages, commissions, anything like that, cash tips, the equivalent. All of that can be counted up to $100,000 per employee. You can also include in your payroll cost calculation outside of cash assistance like vacation, family, medical, sick leave. Now, a clarification on that point: that does not apply to the sick and family leave mandate that was included in one of the previous pieces of legislation that qualifies you for a refundable tax credit from the Families First Coronavirus Response Act. So that's a separate benefit that you would provide your employees. Any sort of compensation for dismissal or separation, and then you can also include portions of your healthcare benefits, including insurance premiums, retirement benefits, state and local taxes can be included in that. So it's a pretty substantial defined list in the law and then the subsequent guidance. But I would say certainly the one thing to remember is it's up to $100,000 essentially on the cash proceeds per employee. And then you can add in some of those other elements And then, like I said, really the only other things that get backed out of that initially will be these, the qualified sick and family leave provisions that qualify for the refundable tax credits under the previous congressional legislation from mid-March, the Family First Coronavirus Response Act.
Let me thank you for that, by the way. Super, there's some really great information there that's necessary. I want to remind people that you are enjoying our webinar today here through the Home Furnishings Association. We've got Michael Borden, who's the government strategies lead for Sidley, a large law firm. He's based in Washington. We've got Chris Andresen, our HFA lobbyist, and Doug Clark, our government relations action team lead. This is being recorded, so you can certainly find it on myhfa.org/COVID-19. Also, two other things real quick. Please send your questions in. We're doing our best to get them answered. Secondly, you'll see on your screen handouts. There is a PPP loan forgiveness FAQ that you may download. It is also available on that web page, that resource page. But I jokingly tell people we have that written in pencil because it keeps changing. We just know that those things are there. Doug, another question that's been a burning one for a lot of our retailers.
Well, one thing, and just Chris alluded to this, but one of the early relief bills, the Family First Coronavirus Response Act, created this family medical leave benefit for employees. And at the time that was passed, I suspect Congress didn't know how many school systems would be closed for the rest of the academic year. And so there are a lot of parents who can claim that leave benefit to stay home with their children. And how is that going to complicate the ability potentially of employers to call back all their workers and to restore their full payroll? Chris or Michael?
Again, a lot of this is going to prove to be inadequate, unfortunately. And like I said, the expectation, I think, back in mid-March and through the end of March, when they were passing the CARES Act, I think that people were imagining that the president was talking about returning by Easter. Then it was, okay, everything's going to open up by May 1st. And as reality set in, and that's not what's happened, it's proving that this initial response isn't going to be enough, which is why they're talking again about a new phase and a new round of stimulus. And so there are going to be opportunities to change all of these programs. There are other assistance. There's other assistance beyond the PPP in the CARES Act as well. There's tax relief that's available to all businesses. There is the $500 billion Treasury Fund, $454 billion of which is available to businesses other than aviation and national security. So there's $454 billion that the Treasury Department has at its disposal, and only a percentage of which has been allocated so far to the Federal Reserve for its lending facilities. So there still remains opportunities for additional assistance without legislation, but it seems now that it's pretty certain that there will be a phase 4, because the CARES Act was phase 3, phase 4 stimulus. So there's going to be more. I think that we're anticipating the new law is going to pass probably, give or take, plus or minus Memorial Day, and that's what we're anticipating right now. So there'll be more, and perhaps rethought and reconsidered.
I would say, Doug, to your point on the paid sick leave and even the paid family leave consideration, certainly we've talked at length about the implications on the more generous unemployment insurance benefits that the federal government's providing under the CARES Act as well. But those individuals who are on your payroll, you are perhaps compensating for paid sick leave or paid family leave, have to meet very specific guidelines set out by the Department of Labor, and those people would still be technically on your payroll. So as long as those folks do not touch the unemployment insurance filings, and Michael touched on this before in terms of some of the documentation that you provide to your lender as you request forgiveness, then that's not necessarily going to count against you when it comes to your employee count calculation with respect to forgiveness.
Okay.
Wow. Here's a question that just came through that I'd like to throw out there because it fits right in with what we're talking about at this moment. This question says, most of our employees are on unemployment. Should we use our PPP loan now and take them off unemployment? Or can it be used if we're able to open before June?
So assuming that all of these unemployment filings happened between February 15th and April 26th, which just, of course, passed this
Right.
week in that window, and depending on when you got your loan and how long that 8-week period goes, right, you're going to have to bring those people back in order to qualify for forgiveness and actually spend your at least 75% of your PPP loan amount on payroll. You have to bring at least some of those folks back, maybe not all, before the end of that 8-week period, which may not line up with that June 30th deadline, which is that exemption for rehires that Michael mentioned before. But in order to, at this point in time, without having that further guidance, what I would say is making sure that, assuming that your 8-week period ends before June 30th, you're going to have to bring at least a portion of that workforce back before that 8-week period so you can get them in payroll, get some of those costs paid, so that then you can apply those for forgiveness. The other aspect to that, as Michael pointed out, was if you don't have payroll in that 8 weeks, you can only count 25% of your non-payroll costs. So that portion of your loan would then be outstanding, paid back, under those loan terms, 2 years, 1% interest with a 6-month deferral. So there's a lot of complications in that, certainly, and I think that's probably a common question mark as folks are looking out. But I would say you're going to want to bring those people back within your 8-week window, maybe closer to the end, so you can get some of that money out the door for payroll to qualify for forgiveness.
You just have to have such respect for any retail business right now trying to figure this out, because you started this process, the rules changed, and now you're just trying to get these pieces to fit together. It's wonderful to have the backing. It's wonderful to have the money, but wow, this is turning into quite a conundrum that continues to change. Doug, you were going to say something. Please go ahead.
Well, I was going to ask about some of the other eligible expenses, utilities. Now, that's rather broadly defined, isn't it?
Yes, I would say very broadly defined.
I would say it's undefined. I would say it's undefined.
So that means anything?
I think that if I were advising anyone, I would tell them, particularly in light of the new scrutiny that the PPP program is under, I would advise, and that loan forgiveness is going to be far more difficult than originally described or than originally anticipated. I would urge companies to define utilities in a standard way without trying to get cute, thinking of it as really the basics, and I wouldn't go beyond that.
Right. I would say, again, just by the way we read the statute, it talks about electricity, gas, water, transportation, telephone, or internet. So to Michael's point, that's a pretty, it's a wide net, but it's also the basics per se, but that's what Congress intended, at least what they put into the CARES Act to help guide businesses like yourselves as you're making these decisions.
Okay. How does the process of claiming forgiveness work? When does that happen? Is there a separate application? Who do you make that to? Is there going to be a logjam on that?
So yes, answering the last question, yes, there will be a logjam. It might be a little less of a logjam than the application process for the loan, because rather than everyone going and trying to get it on the first day, it'll be staggered somewhat around the time of the 8-week period from the day of your, the covered period of your loan. But it'll be presumably with your lender, and that's where you'll have to make the certifications, but we haven't seen the application process yet. Treasury and SBA put that off as they were trying to figure out, put the rules together and put the rules in place for getting the money out the door. Now it'll be a question of, it's going to just, I think we're probably a week or so away from seeing the rules for how they're going to determine forgiveness.
Right.
One thing we haven't mentioned though, and is if you've received the money already, and there is this new safe harbor. If somehow you feel like the scrutiny isn't worth it, or the potential scrutiny isn't worth it, and you've gotten a large loan, so now I would say anything above $2 million in particular, and you've decided, you know what, we don't want the government auditing us or evaluating whether this money was used properly or whether our certification was made in good faith or not. You will have been presumed to have made the certification in good faith if you return the money by May 7th. So that's available too if you just decide that this money ultimately isn't going to be that helpful, not worth it, and you decide not to, and you choose not to take it. So that I just wanted to point that out because that is available too. And I would say that it's a consideration at least, because there's some level of risk. It's not 0, it's not 100, but there's some level of risk, I would say now, for any loan above $2 million.
Yeah, that's why the Lakers gave it back. They weren't sure they were going to be able to bring LeBron back to work in time. No, but that's a terrific point, because we do know the number of our retailers have the money in the bank and are not touching it because they're saying, I don't know how to spend it. So there is at least a safeguard there. But again, we need to remember too, this is still a loan, and if it's one of those things where you need the money to operate, it is there, and it is at a very, very low percentage rate. I do want to remind people once again, we are recording this webinar. It'll be available later today on myhfa.org/COVID-19, our resource page. So please make sure that you do go there and recommend that to people. There was a question I had here that I thought was interesting. So when we talk about trying to figure out the basics of the number of employees I have, they did, I believe, in this law, use the terminology FTE, which is full-time equivalent. So for people that have some part-time workers as well as full-time, is it, if I'm reading it correctly, so if I'm figuring out my overall number of folks in the payroll, I'm looking at FTEs, not necessarily bodies, correct? If I'm working that with the part-timers as well, would you clarify that, guys?
I would say, Mark, for purposes of determining how many employees you have, they do it based on bodies. So it's basically full-time, part-time. That's how you determine whether you're under that, presumed 500 employee threshold. However, you're correct. When it comes to the loan forgiveness aspect of this, you're looking at FTEs over the course of, the 8-week period you have the loan, and then comparing that, as Michael said, your choice to your FTEs from February 15, 2019 to June 30, 2019, or January 1, 2020 to February 29th, 2020.
So Chris, what is an FT? Is it 30 hours a week, 40 hours a week, or undefined?
We're still waiting on the actual clarification within this guidance of what the FTE is, I'll leave it to Michael to jump in. But based on all the Obamacare fights, and I'm sure many of these retailers are familiar with, that really set the full-time employee rate at 30 hours for that specific requirement. So I don't know, we don't know yet how exactly they're going to define that in this context.
Michael,
What I would
any help on that one?
Go ahead.
No, I was just gonna say, any thoughts on that as far as the FTE question?
I think that what Chris said, it makes a lot of sense. But I just say, as he also pointed out, when you're calculating the loan amount, it's bodies. It's based on bodies, and determining the head count of the company, it's bodies, part-time, full-time. And so this was all designed at the time to be as generous as possible. The government in March was being extremely generous. The government in May isn't going to be as generous. And so it's possible that they can increase the definition of what a full-time employee is as a way of narrowing loan forgiveness. I wouldn't put anything past the government at this point because the terms just keep changing.
Okay, Michael, I know you're steering a lot of our members here. So what kind of record keeping should they do? And particularly if they're going to apply this to the entire spectrum of eligible expenses, meaning utilities, rent, lease, mortgage interest, and payroll.
I would keep records of all of it. Look, money is fungible. And so, how you use a dollar, it can be, if you have $2, no one cares if you use the $1 for a candy bar and $1 for a Coke, or $2, you don't know which dollar went where. So that part doesn't matter, but I would carefully, of all of this money you receive, I would carefully try to point out and to make sure that you can show, whether it's through payroll tax filings or anything else, that you have paid that money back. You've used that money to make those eligible payments or pay those eligible expenses. So if you got, let's just keep the numbers simple, you got a $100,000 loan, you were able to show that $75,000 went to payroll. And I would keep the receipts that show that $25,000 went to pay your phone bill, your rent, previously incurred interest on previously incurred debt. I would just keep the receipts. I don't think that this program initially was designed to help small businesses that weren't especially sophisticated. This was not designed to be a difficult program to apply for or a difficult program to get loan forgiveness from. It was designed to help the small guy, the corner restaurant, the nail salon, the hair salon, people who can't afford high-priced law firms to advise them every step of the process. So this is conceived to be easy, and we think that ultimately it will probably be easy to to go through the forgiveness process. But it is going to be a situation where you're going to have to prove it. You're just going to have to, you can't just say, oh yeah, I paid my employees. You're going to have to be able to show that you did. And so any form of receipt that you have, keep it and go to the bank and show it. And it should be sufficient. I don't think that there's going to be an audit of all of these programs. The government doesn't have the resources to do it. It's going to be the bigger loans and the higher profile companies that are going to be more likely to be double checked.
And hey, Doug, I wanted to piggyback on that if I could, to go back 2 questions. You mentioned the loan forgiveness process. It will be done through the lender, and once the lender receives that documentation that Michael just outlined, payroll filings, state income filings, the receipts or canceled checks related to utilities, rent, etc. The lender then has 60 days to determine the loan forgiveness. So I just want to put that timeline out there for folks like that Mark mentioned that are applying or already have this money. You're talking about an 8-week timeline for you to spend the money, and then potentially, another 60 days while you wait to see what your loan forgiveness amount is going to be as they go through all those different documents that you provide. So in terms of, you mentioned timing and how that process works, that's what was set up in the CARES Act initially.
Well, Chris, let me ask you and Michael this question related to that then. So since these loans are meted out through banks and lending institutions, do we assume that there's going to be different thresholds for each one of them as far as what you're putting forth, or are we expecting there to be some sort of standardization? Because I'm almost curious about if we're so far behind on a lot of these rules and things coming out and these clarifications. I'm wondering if each lending institution might require something different of those they have given loans to. Any thought to that?
Well, I think that since these loans are fully guaranteed at the by the government to the financial institution, there isn't, that was designed so that the underwriting at the outset would be pretty simple. That's why, so they were able to have a standard application. And I think that you will see guidance on what will be required of institutions, of financial institutions to receive from the institutions that receive loans. I would fully expect to see that in the upcoming final rules on the loan forgiveness.
Okay. Just wanted to point that out because, again, as we're trying to help retailers manage this, it sounds like you're just saying just use really your best practices when it comes to documentation, and we'll see how that all gets plugged in. We don't know yet how that's going to be plugged in. Another question that's come up many times: how do independent contractors fit within all of this? Because we know that there are retailers that have certain setups where some of their employees are 1099 employees, and there's other relationships like that. How do they fit in, Chris?
Well, that was a question sort of leading up, and we got some subsequent guidance on that because you're right. 1099ers, independent contractors, are eligible recipients of a PPP loan themselves, and so for a retailer, as you're looking at calculating your own payroll costs and amounts, you are not to factor in those independent contractors or 1099ers into your payroll, and the reason being that they are eligible to do that by themselves and on their own. And so Treasury and SBA have also released, subsequent guidance guiding those sole proprietors, independent contractors, 1099ers on submitting their own calculations for themselves as they look to get their own PPP. But you're right, because that could have presented a situation where, a retailer counted a 1099, an independent contractor, and then that person also applied for a loan. So instead of having that conflict, they just completely separated them.
Okay, appreciate that, because that's a terrific clarification. Doug, you got another one for us?
Well, Michael earlier was talking about the intended recipients of this, primary recipients, small businesses. So the very small, sole proprietor, self-employed, is it the same process, basically?
The process is essentially the same for a sole proprietor. Again, as Chris just said, they're eligible on their own to apply for a PPP, and an eligible self-employed individual has to, they have to file different documents. And so you have to submit the documentation that's necessary to first establish that you're eligible, including payroll tax filings and income and expenses from the sole proprietorship. And that's the way that you classify the loan amount, or the appropriate loan amount for the sole proprietor independent contractor.
Okay, another question.
I believe it's also multiplied by 2.5, much like the broader pool.
Okay, and a similar question: as an owner of an S corp, I pay myself a salary and also owner draws. Do I still qualify for it?
So all business concerns. So the typical SBA requirements don't apply here, because the PPP applies to all business concerns regardless of form. And so again, if you have it's up to 500 employees if you otherwise qualify with the employee threshold, and then compensation is capped at $100,000. So any compensation up to $100,000 can be included in payroll.
Okay. Chris talked earlier about the 60-day period that the lender has to evaluate all the paperwork to determine forgiveness. How is the money actually returned to the business?
Well,
I didn't hear that question. You broke up a bit on my phone. Can you?
Michael, how is the money actually returned? The amount that's going to be forgiven, how is it actually returned to the business?
Well, I don't think the money ends up getting returned. It will have been spent, and then I assume there would be some sort of note saying that the loan has been forgiven.
Right, exactly. And to the extent that there's a certain percentage that is not forgiven, then it would be applicable to the terms that are laid out that we discussed earlier. But yeah, so the money that, as you apply, you get a lump sum from the bank that covers that 2.5 times your payroll costs, average monthly payroll costs for the last year, and then you spend that down, and then you're waiting to hear from the lender what, if any, money you're responsible for after that. assuming you follow all these rules, as Congress intended, you would be able to preserve 100% loan forgiveness. But as Michael said, the way that it's written, it seems like more of these loans and a certain percentage of them will be required to pay back.
I also have an interesting question that came across too. For a lot of retailers who utilize a third-party administrator for payroll, are those costs something that you can fold into this number as well?
So that has been a question we have been asked before and don't have absolute or definitive guidance to provide. The amounts paid to a third party to make payroll are not included in the defined payroll costs for the PPP. So it does not seem, based on payroll costs, when you're determining the loan amount, that amount wouldn't be included. So then the question, I think, becomes whether or not that could be considered an eligible expense be included. And while it sounds reasonable, it's not explicitly included in the statute. It hasn't been covered in the rules that I'm aware of. And so I would say that it doesn't seem likely.
Chris, any thoughts on that?
I would agree with what Michael just said.
Yeah, I mean, it's and again, this is part of that whole, a little bit of guesswork here. Also, are any insurance costs able to be included? And if so, which ones are we talking about?
Health insurance costs are, including those health insurance premiums. So that is explicitly called out in the law in terms of, we mentioned up to $100,000 in cash compensation, but then those other elements you could add on to other benefits that you provide your employees, vacation, sick leave, those sorts of things, plus provisions for healthcare benefit, group healthcare benefits, and including premiums. Those are eligible costs for payroll to be in the calculation.
Okay. Doug, we have time for one or two more. Do you have one there in front of you?
Well, there's a question about the banks, and the questioner mentions a particular big bank that's not getting it for us. There were, certainly there was a lot early on about which banks were up to speed quickly and which weren't. And anecdotally, I think we've been hearing that a lot of community banks that we have long relationships with have been administering the loans pretty well. But what's the overview on that, Michael? Do you have a sense of at what level this program is being administered really well?
So I don't. I could only respond anecdotally on what we heard at the outset of, and the financial institutions that we were hearing from our clients that we're dealing with, that people trying to get up to speed quickly. Some banks were ready sooner than others. Some banks had portals available sooner than others to get in line. I think this is going to be, unfortunately, we're not going to know we're not going to know to be able to say, go to Wells Fargo, they're fast, or don't go to JP Morgan, they're slow. We don't have that information. That might come out in an audit after the fact, but we know that there was, as you described, there's been frustration with the financial institutions, which some of it might be fair, some of it might be unfair. Remember, this was a program that was conceived, executed, and implemented in 5 days. And there was an expectation that banks were going to be able to shovel $349 billion out the door from a program that didn't exist a week before that. So, and to do it immediately, and to think that would happen without any sort of snags is, sort of hard to fathom. But in this next round, with the new amounts of stimulus funds, there have been monies that have been earmarked to smaller financial institutions to distribute. And if you haven't applied for PPP funds yet, my advice would be, and this is certainly the advice we were giving all of our clients a month and a half ago, get in line, do it now, get your application in. because this is supposed to be a first come, first served process. And this is a program that has been very popular and is oversubscribed. And the money, though it's $500 billion, $500 billion, is being exhausted relatively fast. And so if you haven't applied yet and you're interested in it, get in line, put your application together. If you ultimately decide you don't want to take it, that's fine, but give yourself the option, because this money is going to probably run out too.
Hey, Chris, let me ask you this. We are winding down to our last couple of minutes here, and I'd like you to start. Can you just give us briefly, you and Michael, some insights that everybody can walk away with on what's going to happen next? I know that this is a little bit like having a crystal ball, but where are we heading in these next few weeks? I know that Michael mentioned about the fourth package, et cetera, but Chris, start us out just briefly as to where you think we're heading and what we should be looking forward to.
Well, certainly, as Michael said, when Congress initially started their COVID-19 response in early March, and then mid-March, and then the end of March, and then this bill that just passed last week, they, initially they hoped that by May we would be, recovering from this. Obviously, that hasn't happened. Certainly, right now, there is, continued political posturing going on from both sides in terms of where this next coronavirus package starts and stops. As it stands right now, it appears that one of the last frontiers, because PPP has gotten a lot of the attention, and some of these other lending programs will be at the state and local level. That has been something where we've seen a lot of activity, not only from the governors and mayors and county commissioners themselves, but certainly within more prominently the Congressional Democratic Conference. But we have seen some bipartisan ideas around trying to help these state and local governments through this crunch. And there's no doubt about it. And there's been all kinds of stories and remarks made. I think a lot of that right now is just posturing, trying to figure out where these negotiations take us. But it does appear that state and local relief, and I don't believe that it's going to be a state and local fund with very little strings. I do believe that Congress will go through and look at existing formulas that they have for various federal programs to direct money to, so that they can have more of an oversight type role, more the ability to steer these funds in a particular direction. As Michael said, I mean, what we've been hearing is that within the next 2 weeks, we'll see some kind of a proposal from House Democrats on what this next package looks like. And then I don't expect that to be a bipartisan package. So if you have a partisan package that then lets some negotiations take place, does that get you to Memorial Day, after Memorial Day a little bit? It remains to be seen. I mean, right now, the House was supposed to come back next week. The Senate's coming back, and the House just called off those plans within 24 hours. So there's a little bit in flux. Obviously, they can negotiate these things from afar, but if the pain is still being felt by individuals, businesses, much like it is as the economy begins to reopen, I think the pressure will only increase. And as we've talked about these recent congressional packages, each day this gets more expensive, especially if God forbid, if as economies begin to reopen, we have another spike in some of these cases. So a lot of variables at play, but that's where I see the negotiations starting out.
Okay. So I would just add to that. In a conversation that I had about a week ago with a very senior member of the House, he said to me that the next phase 4, the next round of stimulus is going to, quote, blow your mind, because the size and the scope are going to be so big. And that means that Congress is contemplating something that's going to be bigger than the $2.2 trillion package that they passed at the end of March. And he said, everything is on the table. And based on every conversation I've had with members of Congress and staff over the last few weeks, everything does seem to be on the table. And while Chris said, the state municipal assistance is going to be debated, I wouldn't discount the idea that there's going to be specific industries that need extra help. And in March, it was pretty easy for people to understand as air travel was shut down that the aviation sector was going to need a bailout. It was easy for policymakers to understand or to think when restaurants were closed and hotels were closed that they were going to need something else. So they got extra assistance in the PPP program with an alleviation, an exemption from the affiliation rules. So companies with more than 500 people could apply. The question is now going to be, which other sectors really need the help? And will Congress come up with direct assistance for those industries? In the retail sector, it's clearly an industry. The entire sector, is clearly in need of additional aid. And my view of this entire situation is that everyone in every sector is going to be asking for additional assistance, more money, more help, whether it's going to be in form of loans, loan forgiveness, grants, tax breaks, Federal Reserve lending facilities. Everyone is asking for something. And my view is, if you don't ask, you're going to be left behind. So as you're thinking about this as an industry, I would urge you to think about what you need and what this industry really needs to get back on its feet as quickly as possible. And I would ask, and I would go to your members of Congress, and I would talk to the administration, and I would do everything I can to get some form of assistance. Because if you don't ask, they're going to assume you're fine, and you're not going to get something. And this is an opportunity unlike really anything we've ever seen before. I was the senior Republican counsel at the House Financial Services Committee during the financial crisis. And when we were putting together the bank bailout, no one wanted to do it. No one wanted to help. During phase 3 of the CARES Act, it was conservative Republicans, liberal Democrats, staff of everyone. Everyone wanted to help. It's unique. And it's not quite the same as it was in late March. It's going to be tougher. But there's still a sense that industries really need help, that they're a victim here. They didn't do anything wrong. And that, the government has a role to play in helping them get back to business. And so I would really strongly urge you to take nothing for granted and assume that everything is possible. And I would ask for it.
Well, Michael, I'm going to let you have the last word there because we're up on the clock here, but what a tremendous call to action. And that's what this team and what HFA has been doing since this crisis started, is getting this industry out front when it comes to that. So what a great call to action. There's going to be much more on that, but I want to just, in order to wrap things up here, let you know a couple of things. First and foremost, this webinar will be on myhfa.org/COVID-19. That is the site for all of our resources. That's also where there are FAQs for PPP loan forgiveness. Go there, utilize it. It's constantly updated. If you'd like to continue this conversation, we invite you to be a part of our new Facebook group. It's HFA Retailer to Retailer. Please get on there and this conversation can continue. And finally, most importantly, Thursday of this week, we are going to have a webinar that's going to really dig into where we are with supply chain, where we are in e-commerce, and what the new customer experience looks like. And we have a phenomenal guest, Todd Wanek, the CEO of Ashley Furniture Industries, will be joining us to give incredible global insights so that as your businesses are opening up, big, medium size, or small, you're going to be able to really get an idea about what to expect. I want to thank Michael Borden. Thank you so much for being a part of this today, an attorney in Washington, D.C. for Sidley. I want to thank Chris Andresen, our HFA lobbyist, and Doug Clark, our lead on our government relations action team. Great information today. We are here with you and for you. There's much more to come. Have a great rest of your day. I'm Mark Schumacher. Thank you so much.